This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to The Commercial Investing Show, where we analyze, explain, and exploit the opportunities presented in today's commercial property marketplace. If you're interested in apartments, mobile home parks, self-storage facilities, and other income property, you've come to the right place. We'll explore what's hot and what's not in markets nationwide in the relentless pursuit of return on investment. Here's your host, Jason Hartman.
It's my pleasure to welcome Paul Moore. He is managing partner at Wellings Capital, best-selling author of The Perfect Investment, Create Enduring Wealth from the Historic Shift to Multifamily Housing. We're going to talk a lot about renters today. He's also host of How to Lose Money podcast. I love it. Hey, I've lost some money too on some deals, so I can tell you that's a good title. Paul, welcome. How are you?
Hey, I'm doing great. Thanks for having me on, Jason.
Yeah, it's good to have you. One of the things I want to ask you, let's start off with the topic of demographics. It's really one of my favorite topics. I am just astounded. I mean, I've been saying this for a few years, but I'm still going to say it, and I'm not going to change the number of years. From my chair, the next 10 years have phenomenal demographics for landlords. Now, I don't know if you agree with that or not, but what do you think? It looks pretty good to me, kind of a bunch of factors coalescing to make that true, in my opinion. What are your thoughts?
I absolutely agree. You know, I was in my early 50s, and I had all kinds of ups and downs over the years, which led me to do the How to Lose Money podcast. And, Jason, I was looking for something that has long-term strength and predictability of demographics that I could do for the rest of my life and pass along to my 4 kids someday if they wanted to be involved. And I couldn't find anything else better than rental real estate. And I had done a lot of different things in the past, but there are a lot of different things that are driving this. As we know, the government got involved, in the 90s, and they were tampering with the housing market, and they changed the laws and the regulations that made it possible for anybody who could fog a mirror to get a mortgage. And in 95 or 6, those rules were relaxed. And as many of us remember in the early 2000s, it was amazing the people who were getting mortgages. My friend who made about $40,000 a year as a multifamily maintenance guy, seriously, he bought a $600,000 second home. And it was actually an old mansion in a coal mining town that had gone downhill in West Virginia. And he literally made a few payments on that before it went back to the bank. And not sure what he was thinking. But at any rate, the housing ownership, home ownership shot up from the low 60s, where it had been for decades, and it peaked at 69.2% in 2005 or 6. And then, of course, the recession hit, and it plummeted back to a more historical norm of around 63%.
This is controversial. I get some flack for saying this, but hey, I get flack for saying a lot of things, so I'll take it. At least I know people are listening, even if they hate me. I think the homeownership rate really should go down. I think the real homeownership rate, if you got all of these artificial factors out of the market, would be around 50%. Now, there was a time when we all thought maybe Fannie Mae will go away. It didn't, but that's a government subsidy for real estate, and right. It's not right. It's just like the student loan thing, and it inflates the prices artificially right. and does all kinds of things. And, I just hate to see this tampering in the market. But look, it's not going away. Okay, we're going to have tampering, at least for the foreseeable future.
Absolutely.
So It just begs the question, what happens? I mean, people have to live somewhere. I don't think there's any big stigma against renting like there used to be. I mean, I own lots of property, and I rent, and I love the flexibility. For the last few years of my life, I've wanted to move around and try living in some different states and cities. And, if I had to sell my house each time and have all these strangers coming through and make the bed every day, it's a huge hassle. The right. mobility factor of being a renter, people being able to go to where the jobs are, there's a lot of advantages. So that stigma seems to have gone away, right?
Right.
So, it's like no more, are you an owner or a renter? That used to to be the way it felt, 15, 20 years ago and before. I just think we're moving toward a more renter-oriented population.
Absolutely. I mean, I think there are three major demographic groups that are driving this shift, and I do agree, by the way. Germany, I don't know what it is right now, but it's historically been the 42, 44% home ownership range. We become like that. I don't know if we'll ever get to 50 or 42.
I'm so glad you mentioned Germany. Look, I was born in Europe, okay? And I'll tell you, Germany do you know they have such strong rent control in many places that people can literally will their rental apartment to their heirs? I mean,
really?
Yeah, it's mind-boggling. At least in places like the Socialist Republic of San Francisco and New York, I think when you die, the landlord's allowed to go get rid of you and get a new renter.
Right. Wow.
Not in Germany, from what I understand. Again, I'm no expert. I just talked to some people, and that's what they told me. So,
That is amazing. Yeah. Well, you talk about this demographic shift. Mm-hmm. And the fastest growing segment of renters is among the baby boomers. And statistics say, Jason, when baby boomers rent, they never go back to owning a home again.
Isn't that wild?
It is.
30 years ago, I would have never thought this would happen this way. What do you attribute that to? Any particular thoughts?
I think it's a couple of things. So we heard from the Depression era, our parents, the World War II generation, etc., that owning a home was the big deal. It was the way to build wealth. It was the American dream. It was all those things. I think we found out in the Great Recession that it wasn't true. Mm-hmm. It wasn't the American dream. It wasn't the greatest thing ever. People saw, hundreds of thousands of their so-called savings be gone in just a year or two, around 2008. And so I think people realize, hey, this is not all it's cracked up to be. Mm-hmm. And also, they've got more money and they've got the ability to downsize or the ability to go to rental homes or apartments in some cases and lower their maintenance and lower their hassles. And I think that they want more flexibility. They want the opportunity to travel. They've seen how hard their parents and others they saw before them worked for something that, a lot of us have gone through our parents' stuff and realized that a lifetime of stuff that they accumulated and homes they accumulated and all that stuff, it's boiled down to a few boxes in a storage unit.
Right, yeah.
And we realize, a lot of us who are 50 or 60 have seen our parents die at 80 or 90. 1 or 2 storage boxes, that's it. Yeah. That's all they left. Mm-hmm. Of course, there's all kinds of other things. But at any rate, so baby boomers are renting more than ever. The second group is millennials. Now, millennials are the largest group in demographic U.S. history, about 80 million strong.
4 million larger than the baby boomers. I mean,
that's right.
It's
4 million larger.
It's a huge demographic. They've got all this student loan debt. They're very portable in their thinking. There's a portability thinking going on in society. And certainly technology has enabled that. And then the sharing economy, millennials just love the sharing economy. They're they don't even get driver's licenses anymore. Like when I turned 16, that's the first thing I wanted to do is get a driver's license so I could take girls on dates, right? In a car.
Oh, yeah.
What a cool thing. Millennials, they don't even care. They just take Lyft and Uber. It's just a different world. It really is. Yeah.
It's very true. So they're tied down to all the student debt. Mm-hmm. They've got huge credit card debt on average, although that may be changing. Mm-hmm. They don't see the point, Jason, of getting tied down to a seemingly overpriced mortgage, a contract for 30 years, locking them into one suburb when they might get new friends, new opportunities, new job ideas across town or across the country next year. Why should they lock in? And they're not.
Yeah. No, I agree. I couldn't agree more. I mean, I've been saying, you mirror a lot of the thoughts I've been saying for years. So very true, very true. Okay, so as landlords, I mean, we've kind of poo-pooed the idea of homeownership, and I think there's a lot of validity to that. There's another trend. I mean, there are a few others, but one I think that's very significant that you did not mention is the trend away from marriage and household formation. And I think that's very significant because in the last 3 presidential elections, maybe the last 4, but the last 3 for sure, there is a voting bloc, a big demographic cohort that nobody even recognizes as a demographic cohort. Usually they say, well, women or men or minorities or whatever, right? Or blue-collar people or white-collar people or, whatever, right? Those they would think of are people, retired people that are members of the AARP. Well, you know what nobody considers to be a real cohort? Singles. We have the largest adult single population ever in history. And you could say it's the, hey, I'll tell you folks, read a book called Men on Strike. It's pretty interesting. I'm going to get the author on my show. It's scary, actually. I think that's bad for society that this is happening. I don't endorse it. I think I think marriage is good. I think it's a good thing for society. But there are lots of, there's been a war on marriage for decades now. And it's working. They're winning, okay? The legal system and a bunch of other factors. And so it's more likely that people will rent when they're single than versus being married, right?
Oh, absolutely.
Yeah. Mm-hmm. Yeah. Okay.
Yeah, and I agree. And I think another group is the immigration. The immigrants are, even though the trend is being fought against right now, immigrants are continuing to grow as a segment of the American population. Sure. They typically rent more often and for longer than people born in the United States.
Uh-huh. Yep, I agree. So all these factors, what do they mean to us as landlords? Well, they mean good news. They mean more customers because renters are our customers. Is there more to it than that?
So I think that every 1% drop in the home ownership rate has meant 1 million new renters in the renter pool. And I think that what the problem this has caused, if I can go in a little bit different direction, is I think your listeners would agree, it's very, very hard to find single-family rental homes and duplexes and multifamily right now. And it's caused a potential oversupply of investors and a potential that people might be willing to overpay for a home and bank on appreciation. And, anybody who was around as you were in the Great Recession knows that if you just bank on appreciation,
you are in trouble.
You could get burned.
Yeah. You're going to get it. Of my 10 commandments of successful investing, commandment number 5 is thou shalt not gamble. In other words, the property must make sense the day you buy it or you don't buy it. And how do you know if it makes sense? Well, the major factor is cash flow. Cash flow is the major factor to know if a property makes sense or not. So, good stuff. Well, so, a lot of these people think they're investors, but they're really speculators, right?
Absolutely. Paul Samuelson, the first U.S. Nobel Prize winner in economics, said, investing should be more like watching paint dry or watching grass grow. If you want excitement, take $800 and go to Las Vegas.
Yeah, right.
A lot of the folks who are saying they're investors, and I've been saying I was an investor since the late 90s, but I was really speculating a lot of times, and I tell a lot of these stories on my How to Lose Money podcast. I think investing is when your principal is generally safe and you have a chance to make a return, but speculating is when your principal is completely at risk and you have a chance to make a return. And a lot of times when I said I was investing, I was really speculating, and I have the losses to prove it, Jason.
Yeah. Well, there you go. Hey, I got a few losses to prove those too, with speculating when I thought of myself as an investor many, many years ago. So definitely not a good place to be. What other investment philosophies do you want people to know?
I think that there is a long-standing principle of risk versus return, and you can picture a graph where on the X and Y axis, you've got risk, you've got return, low risk, low return. And that's generally true, investing in T-bills or investing in money market, et cetera. And then we see at the other end of the spectrum, this 45-degree angle, high risk, high return. And we have that in our minds, Jason. You probably don't, but a lot of people do. And, the truth is it's not true. It's high risk, high potential return. But it can also be high potential loss, including the loss of all your principal. And that difference, that high risk, high return concept, if people could get it in their minds that it's not really true, that they would begin to realize sometimes when think they're investing, they're really speculating or even gambling. And of course, gambling has a negative expected return, but it seems so much fun. And a lot of people, a lot of angel investors realize that, 8 out of 10, I guess, their investments, they expect to lose money. That sounds fun, and those stories are told on blogs, and those stories are told, in bars at the corner in your town and my town, but those stories aren't sustainable for the vast majority of investors. I think it's 93% of people that speculate in the stock market lose money.
Yeah.
Yet the stock market we saw today, the day of this recording, the S&P hit an all-time high. But 93% of people who are day trading or trading, in and out for profit are losing money. It's not a sustainable strategy for most people. Would you agree?
It's definitely not sustainable. And to go back to the comment about watching paint dry, I couldn't agree more. One of the things that I think makes the stock market and other investments like that so attractive to people is that it's like the studies they've done on social media. It's a dopamine hit. And it's like pulling the slot machine. And, we're all animals and we're all human and we're all susceptible to the same types of follies and manipulations and persuasions. And investing is just a long-term process of creating value over time. If you've got to pay a lot of attention to something, it's probably not an investment. It's either a business or a speculation, one or the other if you're trading all the time. So don't be a trader. I agree. Yeah.
Absolutely.
Okay. What else?
Another thing that I like to chat about is, it's a lot easier in a lot of cases. You could find a way to disprove this. I think it's a lot easier to look at people's mistakes and learn from those and learn not to replicate the mistakes than it is sometimes to replicate their success. I heard about a guy who was sitting in an airport and he struck up a conversation with another passenger who was getting on a plane. And a month or two later, that passenger sent him $1 million to fund his new startup. And they both made hundreds of millions of dollars. They did very well.
That was a pretty good plane ticket.
Yeah, no kidding.
Yeah.
So I hear a story like that, perhaps on something like NPR's, how I built this podcast, and I'm applauding and I'm excited. What am I supposed to do with that, Jason? Am I supposed to go sit at an airport and wait for a millionaire to sit next to me? I don't know how to fix that. But if I hear that guy tell the story of his failure, his mistakes, how he blew it, I'm much more able to go, okay, I know what
it's something you can use. It's a usable thing. It's a usable thing to learn. Yeah, that's why I try to share my ups and downs with my listeners. I think sometimes I bore them with it, but well, it's definitely not all ups. You definitely are going to feel the bumps in the road. You're definitely going to have problems. You're going to have evictions. You're going to deal with bad people. You're going to deal with property managers that are bad. You're going to deal with tenants that are bad. You're going to deal with repair people that are bad. But when the investment is so powerful because it's a multidimensional asset class, it can overcome a lot of those things just because of the nature of the asset class and the fact that it has universal need. Everybody needs housing.
Right. Yeah, one of the things I've been doing is because multifamily or rental housing is so overcrowded right now, I've been turning to self-storage to look for opportunities there. Mm-hmm. But I told somebody yesterday, I think 100 years from now, these rental apartments that we're buying or single-family rentals people are buying are still going to be there. They're still going to be rented out. They're still going to be essentially similar to where they are now. Warren Buffett said, I don't invest in the internet because the internet will never change the way people chew gum. And I don't think the way people live is going to be different essentially 100 years from now. Self-storage, I'm not sure. It may be completely different. They may be completely automated, might be on conveyor belts or whatever.
It might not exist because we might
not be needed.
It might not be needed. It's just a different thing. The self-storage thing is hard. That's a whole different concept, predicting that and understanding that. That's a completely different business. Those self-storage facilities are like erector sets. They can go up really fast. And so a competitor can come into your market really quickly and entice people away with a free moving truck they can borrow and, free first month's rent or whatever. But I'm not saying it's bad. I'm just saying it's different. But housing is a very sure bet. And, I was recently reminded of this. I'm reminded of it all the time, but I was with one of our actual clients who is a friend of mine, and we took a trip together, and she and I went up the California coast, and it's great not to live in California, but to still enjoy it, and I don't have to pay taxes there. but to go and enjoy, to go back to where I grew up, right, in LA and Orange County and stuff. And, it's like all the same, we went by a couple of my old houses, and they're all still there. And they're all still producing money for somebody. They're all still producing income. I lived in this apartment. I lived in that apartment as a kid. That was where we went to lunch, close to my school. And, that restaurant's still there, and the real estate owner still owns that, and it's producing income for the owner of the property. It's just an incredibly durable asset class, 40, 50, 100, or hundreds of years later. You go to Europe, and I remember once I stayed in the oldest hotel in Paris. I think it was like 900 years old. It wasn't very nice. This was years ago. That property is still producing income for somebody throughout the generations.
That's amazing.
It is.
Absolutely true. And I think that, and that's what we can learn from people like Warren Buffett. He's buying and he's not predicting on the latest technology or something that can be swept away. As great as Amazon and Google and Facebook are, we have all seen how they've been overcome. Yeah. Companies like that are gone. People looked at MySpace 15 years ago and thought that is the thing.
Yeah, right.
Well, where is it now?
Yeah, exactly. Now, very, very good point. Very good point. Everybody can get the book. It's on, Amazon and all the usual places. Got great reviews. It's entitled The Perfect Investment. And Paul, thank you so much for joining us.
Thanks, Jason. It's been great. It was an honor to be on your show.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.